So you must have heard this saying whereby you need to go over to the higher time frame to confirm your entries for either a buy or a sell, right? Like the 1 hour time frame, because mostly the higher time frame controls the market, right? But this does not mean that you should not check other time frames like the 5 minute time frame, 15 minute time frame, and the 30 minute time frame, right? You also need to check these other time frames to also confirm your entries as well, okay, just to make it so accurate. All right, now I'm going to share with you how you can trade, the boom and crash indices the right way, on how you can also grow your smaller account into a big account using the proper analysis and with a good strategy. All right, so we're going to start on crash 500 index market. We'll go over to the chart right here on crash 500 index market right now. Okay, and these are the steps you want to follow when you want to trade this market successfully. The first step you want to take a look at is the lot size. All right, you don't want to mistakenly set the wrong lot size you want to use. You set the accurate lot size that is accurate to your capital as well, okay, because the lot size is going to determine the amount of profit and loss you get on the market. All right, so you set the lot size that you know that is able to sustain and stand your capital. All right, so right now this is the market. All right, the market have been so volatile on the crash 500 index market. You can see that the market spiked from this point in time towards this direction right here. All right, you can see how big this spike is. The market just dropped in price movement. All right, now the market is at the oversold, so the next step is for this market to buy. All right, the next step is for this market to buy. So I'm using the analysis on the 1 minute time frame right now. So but I'm going to confirm this trade. I'm going to confirm it on the 5 minute, 15 minutes, and the 30-minute time frame, and also the 1 hour time frame. So what we should do right here, I'm going to clear off this object line right now. Then I will go over to the 5 minute time frame. The 5 minute time frame, you can see that the market is not yet at the oversold. You can see the position whereby the market is at this point in time, but it's going towards the the oversold. But because it was the 1 minute time frame we checked first, we saw that the 1 minute time frame moved quickly than other time frames. So it's going to take 5 minutes for each successful candle ticks to complete on this time frame. So now the market sold here. Let's go over to the 15-minute time frame. The 15-minute time frame also shows that the market have bought for a very long period of time. Then you can see for a very long period of time, then it sold. It bought a little bit, then it sold. The next step is for it to buy. Now I've confirmed this on the 5 minute and the 15 minute. So we'll go over to the 30-minute time frame. You can see now the 30-minute time frame, the market have sold for a very long period of time for 30 good minutes. 30 good minutes, and it's now starting to buy. If we check the 1 hour time frame, take a look. They are all at the same position. So these have given us a good signal and a good entry point for a buy. That's why we'll go back to the 1 minute time frame and we'll place a buy at this point in time. So if you place a buy during this point in time, you'll be able to get up to 10 candlesticks before the spike would come into the market. Now if you put in the relative strength index indicator, period 14, levels 90 and level 10 right here, the style on 1 pixel color black done, you put in the MACD indicator, fast EMA 14, slow EMA 24, MACD SMA on 10, you apply to close, the main color black, the signal color red on the first line, you click on done, as you can see right now. So the market is going towards the downtrend. The MACD is going towards the downtrend, and we know that towards the downtrend of the MACD, it means that the market would spike. Okay, we're expecting the spike to happen during the downtrend of the MACD, but I said that it will take up to about 10 candlesticks before the next spike would come, right? If you take a look at this point right here, towards the ending of the MACD, there was a spike, right? There was a spike, you can see. So we might be expecting another spike to come into this market before it will start retesting upward again for a buy entry. But this does not mean that the spike would come. The spike may come and it might not come. But even though if the spike comes into the market, it won't be as big as this. The spike will not be as big as this. All right, it might be long like this one here. It might be longer than this. So this spike that comes into the market right here should be about 15 candlesticks. So if the spike comes into the market during this point, it's going to take away 50 candlesticks from this market. All right, if a spike comes in at this point in time, but I'm not sure that we're going to see a spike right here. So the spike is going to come after 10 candlesticks at this point in time. That's when the spike is going to come into the market, because the market have been selling for a very long period of time. So this market need to balance, it need to balance the trade. All right, you need to balance the trade. Okay, now I'm going to share with you guys how to do this on the boom market as well. This proper analysis. We'll go over to boom 500 index market, take away all the object line right here. All right, remove the indicators so that we can see. Now if you take a look at this point right here, the boom 500, the market have sold for a very long period of time. So this is a higher chance for this market to buy. All right, this is a very good opportunity for you to place a buy and cash those spikes, just as it happened here. Take a look here. You can see that at this point in time, the market sold. Then we started seeing that it bought, it sold, just like this, going towards the direction it bought. You can see. So this is what we are seeing here, that this market would buy, because the market have gotten to the oversold. So we'll check the 5-minute time frame. Let me remove this object. We check the 5-minute time frame. Now I want to show you something. We'll go over to the 1-minute time frame. You can see that this market right here, the same thing that it happened, that it made here, the same thing that happened here, that the market was buying and selling. You can see buy, sell, buy, sell. That is what is happening right here, right now. Market will buy to sell, to buy to sell, to buy to sell for a short period of time before it will retest. You can see that the 5-minute time frame can show us clearly that is what it's doing right now. If we put in the moving average here, period 40, shift 0, method simple, apply to close, style 3 pixels, purple color, you can see that the moving average is still showing you that the market is towards the downward trend, but it's going to go towards this position before it will retest upwards, just like this. This is the pattern the moving average is going to follow. All right, now we'll go over to the 15-minute time frame. We're seeing a huge buy because the market have sold, so we're expecting a spike. The 30-minute time frame, you can see that even at the 30-minute time frame, although the moving average changed position, but the 30-minute time frame is still accurate. The market have sold. The next step is for a buy. The 1-hour time frame, perfect, although it is at the overbought, but the 1-minute time frame is at the oversold. But remember that it takes hourly time for this 1-hour time frame to move. If you take a look at this point, the market bought, is sold, it bought, is sold. You can see that this pattern that is creating on the 1-hour time frame at the overbought, that is the same pattern it created at the oversold on the 1-minute time frame. Take a look. The same pattern here at the oversold, that's the same pattern created on the overbought. So you can see that it's not that different. It's the same thing, but different. They are at different angle and positions. Okay, so if you are smart enough, you'll be able to take this to your advantage. So we'll put in the RSI. relative strength index, the same parameters we use on the crash market. We put in the MACD indicator window 1 using the same parameters we used on the crash market, just as you can see. All right, take a look. Now, how do you know that this market will buy? This is the 1 hour time frame. We're going to the 1 minute time frame. How do you know that the market will buy? Take a look at this point here. You can see when you go to this point, look at it. When it started retesting, the market bought. The same thing happened here. Even at this point, look at the edges. Look at the edge here. Here at the same time. Here, there was a spike. So you can see. I don't know if you understand what I'm talking about. Look at this point. So now, the market, when it got to this point, then the MACD curved to this point, it retested. Then we're seeing another edge here, which will cause for a buy at this point in time. Okay. Whenever the MACD gets to the level of 90, the market will tend to sell. When it gets to the level of 10, when it gets to the level of 10, it will buy. But it does not mean that it has to get to the level of 10 all the time before it will buy. So that's why you saw here that the market bought at this point before reaching the level of 10. Here it's going to buy again without reaching the level of 10. So I hope you understand what I said to you guys, and I hope you are able to use this strategy and analysis to be able to grow your smaller account into a big account on crash and boom indices. So if you found value in this video, do it to like and subscribe. I'll see you guys on the next video.